Oh yes, oh yes, oh yes, guys. Bitcoin is heading to $180,000. Analysts found a setup that Bitcoin is mimicking. And if they're right, we have some seriously bullish times ahead. And we are speaking bullish. Bitcoin just made history. We closed one of the largest quarterly candles ever recorded. Right as ETF flows pour in, the US government shuts down, and gold rips to levels we haven't seen in decades. The setup is something no past cycle has ever seen, and that's why Q4 2025 could be the most explosive chapter in Bitcoin's story ever. What we just saw was a signal that the largest players in the world, Wall Street, Treasuries, and even governments, are driving the bid. And when those players step in, they don't sell on the first red day. They allocate for years and likely even decades. So if you're ready to see why this quarter could change everything for Bitcoin and crypto and our precious altcoin bags, guys, let's get into it without further ado. And you guys already know how to help the channel. Do me a favor, destroy the like button. If you're new to the channel, subscribe, and let's get into it. Guys, US government shutdown has officially landed, and the SEC is frozen. That means no ETF approvals, regulatory decisions, or altcoin filings moving forward until the staff are back in office. In the short term, it pushes traditional investors who want crypto exposure toward the two major products that are already alive, Bitcoin ETFs and ETH. In past shutdowns, Bitcoin pumped first, then followed up with a pullback. In 2018, it fell 23%. In 2019, another 18%. And this time we've surged past $120,000. And the difference is structural. Whales, ETFs, and corporates, they're all putting in bids that didn't exist back then. History shows that shutdowns average only about 8 days, and that the S&P is up 86% of the time a year later, adding another 13% once the lights turn back on. Every day the government is shut down, hundreds of millions of spending gets delayed. Those payments, they don't vanish. Federal workers get back pay and contracts resume once the government reopens. Markets often treat this as temporary noise, and combined with the rate cuts, it adds liquidity back into the system. So if shutdowns used to be the headwind, today they've turned into fuel for the Bitcoin's digital gold narrative. Because to me, as long as we've been doing this, as long as we've been paying attention to macro markets, the government shutdowns really hasn't mattered at all. To me, this is just more seasonality of where we are in the crypto cycle. Now let's zoom out. Stocks are ripping higher, even with all the political noise. The S&P 500 is up 39% since April lows and just pushed into uncharted territory above 6,700. China's Shenzhen Composite, it is at its highest since January 2022. Nvidia just became the first company in history to hit a $4.5 trillion market cap. Gold is up 46% this year, and it's had the best run since 1979. At the same time, the dollar is on its fourth straight red day, its longest losing streak since July. That's a rotation signal. Money is leaving cash and chasing risk assets, hard assets, and anything that looks like protection against our broken monetary system. Gold, silver, stocks, Bitcoin, everything, guys, is ripping together. Think about that for a second. We have the strongest stock market in modern history. Gold's best year in almost half a century, and Bitcoin's printing its highest quarterly close ever, all at the same time. That trifecta has never happened before. It tells you that liquidity is overflowing and seeking shelter in assets that protect against devaluation and inflation. And guys, we've been talking about this for a while. Gold has been absolutely ripping all year long, and Bitcoin had been lagging. Even Peter Schiff had his moment in the sun talking about how Bitcoin's going to zero and gold's ripping and blah, blah. But it just takes a little bit for Bitcoin to catch up, and then it outperforms gold. And that's what you're seeing right now. ETF demand is relentless. On October 1st alone, Bitcoin ETFs saw $675 million in net inflows. Ethereum ETFs added another $80 million the same day. BlackRock's Bybit has climbed back above the $90 billion AUM, making it one of the top 20 ETFs in America. Treasury companies are piling in too. Metaplanet now holds 30,823 Bitcoin worth $3.5 billion, putting it as the fourth on the global leaderboard. MicroStrategy is on track to qualify for the S&P 500 by December, which will force every index fund in America to buy exposure to their Bitcoin stack. On the altcoin side, VisionSys AI announced a $2 billion Solana treasury plan backed by Marinade, aiming to stake 500 million SOL within 6 months. You got Avalanche Treasury Company It's combining with Mountain Lake Acquisition Corp in a $675 million deal to build an AVAX treasury over $1 billion. And SUI, along with their NASDAQ-listed treasury company SUI Group Holdings, just partnered with Athena to launch 2 stablecoins by the end of the year. And get this, revenue earned will be used to buy back SUI off the open market. That's pretty cool. Even nation states are sniffing around. Paraguay Central Bank just held meetings to discuss adding Bitcoin to the reserves. And when you add this all up, ETFs, treasuries, sovereigns, you realize Bitcoin has more structural demand today than gold did back in the 1970s. Back then, gold went on a 700% run in less than a decade. If Bitcoin follows that path, we're talking 6 figures becoming the floor, definitely not the ceiling anymore. 7 figures, much more likely, guys, becomes the floor. And guys, just as we started to talk about digital asset treasuries slowing down, well, it just has to do with the market, right? And if Q4, the seasonality holds true, then these DATs are going to start ripping as well. And if we look on chain, the signals are screaming higher. Apparent demand has been rising at more than 62,000 Bitcoin per month since July. And whales holding are growing at an annual rate of 331,000 Bitcoin. In addition to this, accumulator addresses, wallets that buy and never sell, now hold a record 298,000 Bitcoin. The diamond hands keep continuing to stack. We just covered in yesterday's show that stablecoins are expanding fast, but so too are their Bitcoin holdings. Tether just added another $1 billion worth of Bitcoin to its reserves. Very smart move, Tether. And over the last 60 days, more than $10 billion of new USDT has been minted. Remember, rising stablecoin supply means fresh liquidity is entering our market, which historically has always been rocket fuel during bull markets. Every green September in Bitcoin's history, and we just had another one, has led to an average Q4 gains of 51%. The last 2 Q4s, plus 93% in 2023, plus 112% in 2024. With Bitcoin now trading above the realized price threshold of 116,000, analysts see a path to 160,000 to 200,000 by the year end. That's why when people say October, it's not just a meme. The data shows this exact setup has happened 6 times in Bitcoin's history, and every single time led to massive fourth quarter rallies. So guys, when we look at everything that we're talking about and the eternal bullishness that we've had on this channel, as painful as it has been, I joke around with my friends saying this is the most painful bull market we've ever been in, but it does seem like we are about to get this really, really bullish Q4, and we need to be absolutely ready for it. And speaking of altcoins, they're starting to wake up. The total altcoin market cap is retesting its 2021 highs at 1.7 trillion. The others BTC chart has broken out of a multi-year downtrend with the MACD cross incoming. The same setup that triggered Altseason in 2019 and 2021. Even in the ETF race, Solana may have an edge. Bitwise CEO Hunter Horsley pointed out that Solana's shorter unstaking period makes it more attractive for staking ETFs compared to Ethereum's longer exit queues. That's why Fidelity, Franklin Templeton, Grayscale, VanEck, and others all filed staking ETF applications with Solana in the mix. Meanwhile, meme coins are fading, guys. The GMCI meme coin index has been stuck at 220, down from 600 last year. While investors are piling in tokens with actual utility, actual revenue, stablecoin projects, DeFi, RWA plays, do you think that memes will have a comeback, guys? Let me know in the comments below. I certainly do, actually, if we have this crazy altcoin season. For sure, they're going to rip hard, right? I mean, for now, people are looking for real utility, but when it starts to get to silly season, the banana zone, memes will fly, and we'll talk about them when and if they do come. That shift from pure speculation to utility mirrors the early internet. First, you had the .com names that were just hype. Anything.com, right? Remember that? And then there's companies with real infrastructure. You got Amazon, Google, Pets.com. They started pulling away. That's what we're seeing now in crypto. The treasuries, the staking leaders, the protocols with real world integration are setting up to dominate alt season. Also the ones with real revenue, real growth, and that are putting that revenue back into the token. Now guys, onto the big event coming up toward the end of the month. CME FedWatch tool shows a 99% probability of a rate cut on October 29th. Historically, when the Fed cuts after a long pause, equities rally hard, medium gains across sectors have been double digits, with healthcare and consumer staples up more than 20%. Sure, we're not invested in those markets, but this just shows you that rate cuts are generally bullish for most markets. And I think it's going to be even more bullish for crypto, almost certainly. Gold now sits at $1 trillion in US reserves, and it's on pace for its best year since 1979. Bitcoin historically lags gold. And if that pattern repeats, Bitcoin could be next in line to follow this breakout. Guys, I've been in this space for over a decade, and I've never seen Bitcoin and gold both rip so hard like this together. It feels like we're living through financial history, but with front row seats. Guys, and remember, in the 1970s, gold wasn't even legal to own for most of the US public until 1975. When that restriction was lifted, the floodgates opened. Bitcoin today is in that exact same position, except instead of legal restrictions, it was Operation Choke Point, right? And now that regulations are taking shape, ETFs are live and treasuries are scaling in. The floodgates have been blown wide open. So guys, here's where we stand. Shutdown chaos, record ETF inflows, corporate treasuries stacking, stablecoins printing billions, nation states entering, equities and gold exploding higher, and Bitcoin just closed its highest quarter in history, setting the stage, a perfect stage for Q4. The old four-year cycles were driven by halvings and retail. The new cycle is being driven by institutions, sovereigns, and global liquidity. That's the ignition point we're sitting on right now. Cycles, they don't die, guys, they evolve. And the evolution we're living through is Bitcoin and crypto stepping out of retail speculation and into the architecture of the traditional global financial system. That's why this quarter matters more than any before it. By the time the year is over, the question won't be whether Bitcoin breaks records. It will be whether the world can catch up to it. So guys, the writing's on the wall. We're about to get into stupid season, and we need to be dedicated. We're going to enjoy this. We're going to be all over it. We're going to play altcoins. We're going to watch rotations. We're going to get into things that trend, and we're going to take profits, and we're going to keep our money. We're going to be glued to the data, glued to the numbers. And this is about getting really, really exciting. For those of you guys who have been here watching this channel for years, those of you guys who have been waiting and going through the pain and suffering with us, well, guys, this is the time that we've all been waiting for. It is finally approaching. We have entered Q4, post Bitcoin halving, which historically is always ripped. So the only question, guys, is are you ready? That's going to be it for today, guys. Have a wonderful day. I'll catch you on the next one. See ya.